And welcome to another episode of the podcast.
Good afternoon. These are your hosts, Yawer Nabil, coming to you from Toronto.
The reference library like last time.
Yes, we found that the reference library is nice and roomy and gives us room to grow.
Yeah, it's all about accessibility, and that's our topic today as well in some ways, isn't it?
We have lots of sunlight and water and photosynthesizing. But yeah, sorry, go ahead.
Yes. Our topic today, accessibility and banking the unbanked.
Very interesting topic. I'm super interested, in finance and banking and how people can access convenient monetary and be part of the the official economy and
In fact, this
engage in
discussion,
commerce.
in fact, this discussion for us really started. We started talking about it with the announcement of UPI. So, can you just, because you shared the article originally with me, can you just talk through what UPI is, why it is important, why you thought it was important, why did you share the article with me?
Yeah, absolutely. So first of all, let me define it. UPI is India's universal payments interface. It's a government-backed technology for easy money transfer between any private citizens or businesses. So you are, a private citizen, you go to a roadside vendor, a roadside cart, and you want to pay them 10 rupees for a cup of tea. So you can just send them, you scan their QR code and send the 10 rupees, and they give you the cup of tea, and no cash needs to change hands, and they get the rupees deposited in their UPI account immediately. This I felt was kind of and this is instantaneous, it's free, and it's accurate, and it's enabling commerce between anybody and anybody. You don't need to be specially registered, you don't need to pay fees to payment processing institutions or companies, gateways like Visa and other people, Stripe and whoever it is. You can just do peer to peer, and it's enabling and empowering people to interact directly with each other instead of having to go through, constantly jump through hoops.
And I think for listeners in the West, the experiment that they should do is try not using your credit card for 2 weeks and carry cash instead, and carry a small amount of cash, not like $100 or $200. Carry like $10 and see how many times you have to go take out cash, because you have a lot of little transactions and the money disappears pretty fast, and people in India and in Pakistan aren't necessarily carrying credit cards. The shopkeepers don't have the payment systems for the credit cards to work, to be able to charge as well, this particularly the smaller shopkeepers. So I think the accessibility factor for both the shopkeeper and the uh, customer is super critical, because here in the West, we're so used to having a credit card and just pulling that out and just paying with it. And if you don't have that, you pull the second MasterCard out.
Well, even here in the West, it's a struggle, even for especially for smaller merchants, because like mom and pop stores, they have to constantly fight with credit card processors
Hmm.
because of they keep increasing their fees. Visa and Mastercard, these people are taking bigger and bigger cuts out of all of these transactions. So you constantly, if you are a small shop and a small merchant, you are seeing your profits and your sales being cut into by these middlemen, who, for the convenience of providing these electronic transfers, which they preserve the right to claw back those uh, funds if the customer happens to do a chargeback for whatever reason. So you are losing out in several different ways by using these credit card processors. Now, if you are listening to this banking the unbanked money transfer discussion, you might be thinking, well, what about crypto? Wasn't crypto supposed to solve all this? What happened there? Well, what did happen, right? Crypto unfortunately turned out to be mostly made up of people who were trying to scam you and gamble with your money and essentially did not really do anything productive in society. It was mostly people who were trying to finance their crimes, like criminal activities or other, illicit activities. So unfortunately, for various reasons, which we probably don't have enough time to get into right now, crypto turned out to be a dead end. But there are legitimate ways to make money transfer easier through ways that people can actually trust. But as one is by having government initiatives which do that. One of the biggest talking points nowadays in government finance circles is the central bank digital currencies. So they got bitten by the cryptocurrency bug, and they said that, well, why don't we do our own cryptocurrencies, but now under the control of the government? And so now we enable people to use them and become digital. Well, there's a lot of hype and overselling of many things, and confusion between different concepts, but there's a kernel of utility in there, which you can see by just looking at what India's UPI has done. As I mentioned earlier, they enabled commerce between people without intermediaries.
I think there are 2 points on the crypto side which I think are critical. One is critic crypto is still a complicated concept for the average user, and we're talking about the average global user, not just the average. Even in North America, there are a lot of people who don't understand it. In our bubble, people might, but in the average user, which is not the tech bubble or the professional class bubble, people don't understand what's happening on the crypto side. It's a dark horse. Whereas a QR code and being able to just take a snapshot is a very, very common behavior at this point for the average user as well. They have seen it happen. If even in places like India and Pakistan, where there's a lot of poverty, people have done it. People have access to smartphones and know what a QR code is. Whereas crypto is still a fuzzy random concept that they don't understand, and that doesn't impact their day-to-day trading in that sense. So that's one point on crypto. I think the other point on crypto is just the volatility of it. You as a poor person, you can't put your savings in something so volatile, because this is not $2,000 out of 10,000 that you're taking away and playing with, or this or that. This is like literally people who all of their life savings is $100 or $200 net, you know. So they don't have the opportunity to play in the crypto space in any case. It's not for them.
It's not a game for them.
It's not
It's
a
life or death.
Yeah, it's life or death. They simply can't play this game. So they're not interested in putting money in something so volatile. They would rather
So
want
opaque.
so opaque. They want something more solid. I think the other piece that I want to connect in here is so Pakistan has had right across the border from UPI since like 15 years. Banking the unbanked has been done by EasyPaisa, which is a Telenor brand. What they did in Pakistan is that they bought a bank called Tamir Bank, and then something similar to what they're doing to in India, but something different, which is that they trained a lot of official uh, convenience store owners as official representative of Tamir Bank, and these convenience store owners are often located in very rural areas where the bank would have a very high cost of maintaining services, etc., etc. And they basically, these convenience store owners, they act like real ATMs. So you can transfer, you and I can transfer some money on our smartphone or on our SMS or via SMS, and then we can. I have transferred the money to you. I live in a different city. You live in a different city. You go to the small convenience shop, and they would have received all the ID and the notification, etc., etc. So you can just go collect the money from that small convenience shop or that ATM. So it allows, but this was being done at a rate of, like, you would use something, because there's still a matter of going to the place, etc. So you would use this for something which is over 1,000 rupees, not a
Not a 10 rupee cup of tea.
not a 10 rupee. So, there's also levels of banking the unbanked. There's the level of like, hey, 500.
So wait, sorry, I don't quite. Let me clarify something. Is EasyPaisa letting you send remittance or payment from person to person via phone?
Yeah.
You don't have to go through this shopkeeper. You can send directly to another person.
I'm sending it directly to you.
Okay.
But you might you have to keep in mind that in societies like Pakistan and India, a lot of rural people have to get up and go live in cities and earn a living over there, and then they need to send that money back home. How do they send that money back home without physically sending the money home? Where they don't have big bank accounts back home. There's no big banks in the rural village. There is no TD in the rural village. It's just small shopkeepers, and everything is done cash transaction. So now I want to send money to my family member at home. I just SMS them with the right code ID and the amount of money. They can go to a shop with that SMS, they have received it, and show them that code ID, etc. And the small shopkeeper has a little terminal, and he will check his not a little terminal, he will check using his phone actually that all the information is correct and give you the money straight away in your hand.
I see. I see. It's a way of doing a cash transfer, but from phone to phone. But
Yeah.
the end result is that you will go and pick up cash. It's a lot like Western Union in a way. That's interesting. EasyPaisa is in contrast to UPI, which is, I would say, maybe one or two generations and ahead. They leapfrogged and they built this system. UPI actually has an interesting context because a few years ago, the Modi government outlawed large denomination currencies in India, currency notes, I would say, as a way of combating money laundering and terrorist financing. And there was a huge hue and cry about it because people said that you're restricting our ability to do commerce. And one of the responses to that, one of the initiatives that came out of that was UPI, so that they would enable people to do cashless commerce. And so far all indications are that it's been a huge success.
Yeah, and I can understand why, because as I mentioned, even the Easy Paisa was a huge success in Pakistan. It's been running for over 15 years and it's heavily used. So there's that example, I think, which is comparable. I think the other one that is very interesting is actually looking at the example of Bangladesh and Grameen Bank, because part of banking the unbanked isn't just the access to it, but in terms of technological access, or the money aspect and the amount aspects and physical access that we've talked about, but also creditworthiness. And what the microfinance bank in Bangladesh does is that a lot of people, or the Grameen Bank basically, a lot of people who would be considered not credit worthy because they're just too poor and would not have access to any loans through traditional banking systems because they're just too poor, are able to get money and loans. uh, and by the way, there are similar banks and activities in Pakistan and India that exist on the same model thanks to the Grameen Bank existing.
They're in multiple continents. In Africa, Grameen and Bragg Bank have had success in
Yes.
spreading the microfinance model.
Yes.
One of the two innovations I would say are the major ones. First is the ability that they created the system of giving small loans, microfinance loans, without without requiring collateral. See,
Yes.
in South Asia and Bangladesh and these countries, collateral is considered very important because collecting on loans, collecting the payments is a huge problem. People just don't pay. There's a huge amount of fraud. People just don't pay back their loan repayments like they should. So collateral has been traditionally like a huge requirement in Bangladesh and South Asian banking. Grameen Bank, they went the other way. They said that we're going to take smaller risks and give smaller loans, but in exchange we won't require collateral.
Yeah.
And the second innovation was they targeted specifically women more
Yes.
than they did men, because they figured out that women are more likely to try to legitimately run some enterprise. For example, they might open up a small business, selling cow milk. They own a cow. They would set up a business selling the cow milk, and they need a small loan for that.
Or even something like embroidery or tailoring, or these kind of things. I was involved with the Kashf microfinance during my masters. I did a small project for them around HR, but it was a very eye-opening experience, actually going into the slum areas, talking to people from both the people who go over there and what their experiences are, and what kind of how do they judge the different families that they're giving loans to, etc., because they play a very critical role in terms of judgment, etc. So I had some very interesting experiences during my masters, because people in a particular income class will have a particular view about people of a different income class, which is very much dictated by the negative, by the fear factor. And when you actually go talk to them and actually see what those people's lives are about, you realize, well, your fear are unfounded. In fact, these kind of services are super critical to making sure that your fears remain unfounded. You give them money, you give them access to transactions and financial systems, to the people who are unbanked, and they have opportunities after that. And once they have those opportunities to do commerce, then they don't have to do the things that you fear about them. It's as simple as that in my head.
Yeah, yeah. So in some communities, people have problems with drug addiction, alcoholism, gambling, and many banks in the past didn't want to give loans in these communities because they felt that the money would be wasted on these bad habits. But the microfinance initiatives, they targeted specifically women who they found would be more likely to use the money legitimately and actually
Yeah.
run businesses and will try to provide them for their families.
Yeah, and the experience of Grameen Bank is that kind of a model just works. It just is good. And I think part of the discussion around this is that, hey, where are the microfinances services in North America? Where are the banking, the unbanked services within North America? I know there is Venmo and Cash App, and there is in fact, the existence of Venmo and Cash App show that there's actually is a market to create something to that effect, which would be taken up by people. But
There's Interact in Canada, right here in Canada.
yeah, there's Interact, but Interact is still considered with the big banks, and I'm going to say that the way that the big banks have done it have made it very accessible, giving credit to the big banks here in North America, which I'm not likely to do, because so credit where it's due. But
Literally.
uh, there's a next step of services that are to be delivered in the rural area, and we've had some discussion around previously around telecom and that in delivering rural area services, but also, like, there are many parts of Canada where banking the unbanked would be a good idea, in my opinion.
Yeah, so we touched on merchants and people who try to do commerce, people trying to start businesses. There are many roadblocks and factors which hurt their startups and their chances. Um, you know, money transfers, fast, cheap, and easy money transfers would, I think, be would kind of, again, to use my favorite phrase, bring about a Cambrian explosion in commerce in the Western world. There's a lot of room here. In the Western world, it's not as if every single part of the countries are and societies are equally developed, right? There are many underdeveloped areas.
Yes.
Which rival, developing countries in poverty levels.
In fact, in some parts of North America, within the US and in Canada, the numbers show that actually the quality of life is declining, poverty is increasing.
Yeah.
And there's a huge dichotomy between the haves and the have-nots, the gap keeps increasing.
Exactly, by many measures, and we are definitely interested in exploring that further. But just I want to kind of steer the discussion towards another aspect of this particular money and finance, which is, well, what about anti-money laundering, anti-terrorism, and other kind of regulations and laws which are put in place by governments to try to stamp out these kinds of extreme activities which are and the financing which are required for them. Of course, you're never going to just like uh, legislate away all criminals. You're never going to pass a law which is going to cause a criminal to say, "Oh well, I can't be a criminal anymore. I give up. I'm going to go straight." You're not going to do that. But the point is that what they do is uh, they put in place controls and tracing and tracking and monitoring of cash and monetary flows, which they use to detect if there is illegal activity likely going on, illegal financing activities, which are funding crimes and terrorism. Um, so why do I bring this up? The reason I bring this up is because these regulations, which I feel are legitimate. You don't want people to be able to fund terrorism and criminal activities. Without restrictions. You want to put restrictions there. Uh, they are legitimate, but at the same time, they stand in opposition to people who are just trying to go about their daily lives and do business with each other. For example, for many transactions, okay, fine, you know what, I buy a $3 cup of coffee or I pay for transit, that's cool and all. It's a few bucks here and there. But if I want to send, money transfer, maybe I want to buy a car, or maybe I want to buy some equipment or whatever it is. I think a lot of people nowadays know about this $10,000 limit, where above that limit, those transactions are considered to be suspicious. Well, technically, that's not exactly true, because what is considered suspicious is if you try to break apart your $10,000 transaction or $10,000+ transaction into multiple transactions to make it look as like you're trying to hide a bigger transaction. That is considered more suspicious, but many people don't know that. Anyway, point is, there's a push and pull between these, and I feel like we need to figure out a way to enable commerce and instant payment while also trying to curb fraud and money laundering.
And I think this goes back to data science. The reason I say it goes back to data science is because before Grameen Bank came into being, there was an assumption of how people would behave, and then they did an experiment. They had data that showed that people do not behave this way. And when they took that data and built a bank on top of it, it worked. It created a whole new market. And I think that your point is absolutely valid. The thing is, look, the reason people they're on top of 10,000, in fact, on top of $2,000, there's a charge that Interact takes because they're transferring more than a certain amount of money. Now, people don't want to pay that charge, so which is very natural. So what would they do? They would break it into like 1900, 1900, 1900 until why? So that I don't have to pay the charge when I'm not in a hurry, and why shouldn't I do it? And then that will trigger the system for, hey, are you doing money laundering? But I am just trying to make sure that you do not charge me for something that I don't want to pay for because I have the time and the availability to actually transfer in smaller amounts. That's what people are thinking, right? And so they go ahead and do this. So the the actual fact that you have a charge in the first place over 2000, which is supposed to be a anti money laundering kind of
or anti-fraud, yeah.
Anti-fraud.
To try to curb the occurrence of fraud by making people try to jump through more hoops to
Yes.
if people are trying to commit fraud.
Yes, and then what it creates is a signal that, oh, you're trying to commit fraud, which, I mean, what you're saying is, hey, there is a sweet point oh, where there's a nice spot where a sweet spot where you can figure out, hey, at this spot people aren't going to commit fraud, and this is the right spot to start. I mean, you know, the dollar just on in the past uh, 2 years, post pandemic, post the inflation crisis that we're having, has lost so much value. The purchasing power has lost so much value on the dollar that, like $2,000 is nothing anymore. And
Yeah, I want to also point out that anti-money laundering, anti-fraud, and constant monitoring and tracking of activities and trying to detect fraud, trying to detect illegal activities and activities
yeah,
which look illegal. These are constant, ongoing operations. These are 24/7. They're happening in banks, payment processors like
yeah,
Visa, MasterCard, any payment gateways, any payment apps. All of these people have massive, massive operations which are constantly scanning for potential signs of fraud. And how do they do this? Like you said, data science, machine learning.
yes,
They have why is every bank constantly looking for data scientists? And data engineers? Well, because they're running these gigantic detection systems,
yes,
which are constantly looking for fraud. That this is the underpinning of our easy money transfer and payment systems nowadays.
yes,
You pay for a $3 cup of coffee with your Visa or what Mastercard or whatever it is with your debit. Well, the system which why do you have to wait a few seconds for that transaction to go through? Well, because the anti-fraud, anti-money laundering
yes.
system is
It
running.
says over there as well, authenticating, processing. That processing is the part that you're talking about.
Processing and then approved. So processing that part is what's it doing? It's checking not only do you actually have the money in your account, or do you have the credit to get that money from your bank, but it's also checking that is this likely to be a fraud? What's the likelihood of this being a fraud
Yes.
or money laundering?
Yes. So if you're failed at the authentication level, it means that you didn't pass the password check.
Sure.
I do not recognize who you are. So if you fail on the processing level, that means that I don't think either you have the money or I think you're doing something illegal.
Yeah.
Or there might be some fraudulent or illegal activity happening.
Yeah.
So
For example, have you ever gotten a payment declined and then you get an SMS from your bank saying that we detected a suspicious
that's exactly
transaction? These banks, they're constantly monitoring transactions and looking for suspicious transactions.
But when I say data science, I think that one of the things that happens is that while these organizations work with the government to do tracking, um, the policies are put in place by the government which are more focused on tracking money laundering and less focused on and so it's a top-down approach. When I
You're
say
true. That's true. That's a good point that you bring up. Distinguishing between the two use cases.
yes, and when I say it should be data science, it needs to be an iterative approach. So what the government needs to do is go back to these banks and the availability of data that is there, and use that data to actually figure out and redo the laws based on the sweet spots. Like here we have identified a new mechanism. Here is something that we were checking, and we have figured out over ages and ages that this is not really critical or not worth tracking, and it's just a waste of money tracking that. And so I'm saying it needs to be not a top down but an iterative approach.
Yeah, you're right. Which is why banks and governments have such a extremely close working relationship. Banks closely monitor and governments closely monitor. They monitor and work with each other. It's been a long, very, very long relationship. Governments have a vested interest in preserving the integrity of the banking system and the trust in the banking system, without which your economy is going to collapse. So the government has a big interest in that. While at the same time, government doesn't have interest in looking at low-level occurrences of frauds, which would impact, like somebody scanned your credit card information and started ordering coffees at Starbucks in a different city and that's fraud, and your customer, the bank's customer, is going to lose some money, potentially, if they don't notice the fraud. Um, but that's the loss of the customer, and that's the loss of the bank ultimately, if they have to refund the customer. At a government level, you're not worried about the stability of the economy if a few fraudsters are stealing credit card information. But you are worried about the economy if terrorists are financing their activities through these giant banks, which many banks have a reputation for. Actually, because of their secrecy, they're able to get away with
Yeah,
many
that's
suspicious
the funny
transactions.
thing is that you pick up a famous bank and you figure out at some point or not, it's been involved in some kind of money laundering scheme,
Right.
from the
Yeah.
Deutschland Bank
Deutsche Bank. Yeah.
to HSBC
Yeah. Yeah.
to, there's been banks that have closed, like BCCI was closed because of this. Citibank has, I've heard, as well. And all of these, please go check yourself on this, because we're not
Yes.
making any claims. We don't want to be sued by these banks.
We're not. We're not saying this or that happened either way, but you go online and you can look, and you'll find many, many famous banks which have been directly linked in some way with money laundering and terrorist
Yeah, yeah,
financing,
yeah.
and they've paid massive. They've been fined massive amounts of money in relation to these activities. Banks, they have a kind of a very close relationship with these activities. Uh, Sometimes they are, legitimately they fell victim because they just got fooled by these criminals. Sometimes there were people who got greedy in these banks, and they said, well, you know what, let's just push this one through, and we'll make a lot of money, so let's just look the other way.
Let's focus back. Let's take, what are what's our main takeaway from the UPI banking the unbanked discussion today that we've had?
Yeah, so the main takeaway, right? Banking the unbanked is, as we said at the very beginning, there are lots of people out there who don't have a lot of trust in the banking system, and there are many people who actually go out and spend their money at buying lottery tickets instead of putting their money in savings. Because they feel like they have a hope of winning the lottery, and then they don't have to worry about money anymore. Uh, you know, Interestingly enough, there has been an initiative which I feel is a very fantastic and clever idea, which is to take advantage of people's propensity to gamble with their money and make it work for them in a beneficial way. So, what do I mean by that? For this specific initiative I'm talking about is to offer people a ticket in a lottery whenever they deposit a certain amount of money in their savings account. So, but this way, you incentivize those people who have this gambling attitude or habit to gamble by doing something that's beneficial for themselves, which is building up their savings. And they satisfy their cravings for this chance of winning some lottery money.
For me, the takeaway from banking the unbanked is that, we often look at the West as the leader in technological innovation, but sometimes some of the best innovations are actually coming out of developing countries, because the challenges that they face are very different, much harsher than the challenges faced by Western societies. And some of the solutions that they come up with are actually really, really good and should be learned from. And I think UPI, Telenor, Grameen Bank, all of them are heroes in my opinion, because they're taking on a really tough challenge, and they're doing really well at solving for that.
Exactly. In the West, our systems have gotten complacent. In many of these countries that we mentioned, especially India and UPI, like I said before, they leapfrog generationally. They've
Yes, that's
advanced
exactly.
Yeah. Because they learned from the mistakes of the Western developed countries, and they went above and beyond and adapted to the harsher conditions and more demanding
Yeah,
requirements.
yeah. Survival of the fittest.
Survival of the fittest, learning from the Darwinian nature of other people's failures.
Yeah, yeah. And I think that would be a close on today's episode. Yeah.
Yeah, I feel like that's a good place to wrap up here. Really interesting discussion. Thank you, Nabil.
Awesome. Talk to you soon. Take care. Bye, guys.
Cheers.